Imagine a world where the dollar isn't king. No longer the world's primary reserve currency, the US would lose the ability to fund its trade deficit and geopolitical power would shift. The implications are enormous, and yet this is a very real possibility in our rapidly changing global economy. Today, we'll explore the role of reserve currencies and what could happen if the US dollar were to lose its dominant position. This is an important topic. It affects everybody around the world. I'm going to be talking about what a reserve currency actually is and the implications of the US losing its dominant role. Now, this is something we're talking about speculation, but in fact, as I've highlighted in recent videos, this is something that's really going on already because it's not just an overnight flip of the switch and it's going to change. No, in fact, we are going to see the elements of this unfold weekly as new information comes out. Already, we're seeing that with the BRICS nations, and I've been talking about that a lot. You came here for the truth, so let me unveil that for you. Let us first define what a reserve currency is. According to the IMF, a reserve currency is a currency held in significant quantities by governments and institutions worldwide to facilitate international trade and finance, such as trade in goods, in services, investment flows, and currency interventions. It is used as a medium of exchange, a unit of account, and a store of value in international transactions. That's what happens today, right now, already in different currencies. But the US is like the primary one that countries are going to use. It's steady, it's stable, and that's why it was done for so long. But today things have changed because of, all these geopolitical tensions. One country doesn't like another, you've got sanctions, and so countries are saying, I'm not going to go buy this US dollar when I'm doing business just between us. And so there's now bilateral trade taking place without the need of the US dollar. This has major effects on what happens with the dollar itself. The choice of a reserve currency is based on several factors, including stability, liquidity, convertibility, and acceptance in global markets. You can take a US dollar to so many countries around the world and they will accept that. But they may not exactly accept a Venezuelan bolivar, for instance, okay? That's the important part. And that's really what the US dollar has now. There's no question. The British pound was historically the dominant reserve currency in the 19th and 20th centuries due to Britain's economic and political power. But after World War II, the US emerged as the leading economic and military power. Definitely all the gold started coming their way. Its currency, the US dollar, became the dominant reserve currency and used to stabilize international trade and finance through the Bretton Woods system. You remember when they signed that agreement, everything changed from that moment. The US dollar's hegemony has been reinforced by several factors, including the size, the US economy itself, the depth and liquidity of its financial markets, the credibility and supposed independence of the central bank, the political military influence of the US in the world right now. All these different things, that's what sort of the textbook definition would describe it as. Reserve currencies have a significant impact on global financial markets as their use affects exchange rates, interest rates, capital flows, all of these things. That's why we had just a few years ago when there were big changes in interest rates. Well, you had some of the central banks in emerging markets asking the Federal Reserve to please stop. They were saying, please stop, because it directly affects them. This influence can also extend to global politics, as reserve currencies can be used as a tool of economic diplomacy or as a means of exerting geopolitical influence. Reserve currencies benefit from network externalities, things that are going on outside, meaning their value and usefulness increase as more people use them. So it's really important. Like the Chinese currency cannot be used as a reserve currency for everybody in the world all at once because it's just not viable here at this time. That's why the US dollar is still used, but things are in flux. As more countries and institutions adopt a reserve currency, it becomes easier and more efficient to use, reinforcing its dominant position in the global financial system. So in recent years, there's been a growing concern about the sustainability of the US dollar's dominant role. The increasing global economic and political competition from China and other emerging markets has challenged the US's position, and the continued US deficit spending and national debt have raised concerns about the dollar's long-term stability. So this is something that I've been talking about a long time. You've heard the news out there, but certainly it's like death by 1,000 cuts, not death by 20 cuts. Okay, you got to realize it takes a long time, but just like the British currency, the pound is no longer that dominant. It's still strong, but look at where it's been basically since the financial crisis, just been going down and down and down and down versus the US dollar. So the former US Treasury Secretary, Larry Summers, said, quote, "It is not possible to imagine a world without a strong and dominant US dollar, but it's also difficult to imagine how the United States can sustain indefinitely the privileges that come with being the issuer of the world's dominant reserve currency." Really important, okay? And these are only the things you're going to get after they leave their position, after the role. You're not going to hear that coming from Janet Yellen. You're not going to hear that from Jerome Powell at this time. But once they leave their high-level positions, then you tend to hear that kind of stuff, okay? What are the implications of the US losing its dominant role as the world's reserve currency? That's the question that a lot of people have asked me, and that's really the premise of this video here today. You're probably wondering that. So in this section, we're going to talk about that here, and I think everybody should be paying attention. The effects would be significant and far-reaching, not just for the US, but for the global economy as well. There could be a decline in demand for the US dollar, which would lead to a fall in its value relative to other currencies. This would result in higher prices of imported goods and could lead to inflation in the US. You also have the loss of the US dollar's status as the world's reserve currency. That would diminish the US's ability to finance its deficits through the sale of US treasuries to foreign governments and investors. You got to realize this. The current status of the United States exists because of that monopoly that it has the petrodollar, with Saudi Arabia saying we're only going to price in US dollars. But now that has changed. Saudi Arabia says we love the US, but we also love China. That did not happen just a few years ago. And now they are trying to get their way into the BRICS nations. They know what's going on. They want their business to be applied not just to one side, but to everybody. And that really has an impact on the US dollar. Look, if they can't do this, well, then it's going to make their situation more difficult. It's going to make it more expensive having the US borrow money, right? It's going to have a challenge for them. It could potentially lead to a debt crisis. The shift away from the US dollar as the world's reserve currency would likely result in greater use of other currencies, such as the euro, the yen, the renminbi. It could be anything. It could be any one of these currencies, a basket of the currencies, or, as they're starting to do, central bank digital currencies more likely. And we have what the BIS, Bank for International Settlements, and the IMF doing on their own, creating their own supranational, or what they call international CBDCs. Very worrisome. Additionally, we could witness a weakening of the US's geopolitical influence, as the US no longer has that same leverage that comes with controlling the world's primary reserve currency. When they don't have that, they are weak. They are going to essentially have difficulties. You can point the gun at them, but there's only so far that will go. Today, they like to use their economic powers. It's a lot more political when they can do that. You also had Henry Kissinger, who, I'm sure it's not a fan. We're not too much of a fan of the guy. But anyway, the quote is important. "The dollar's role as the dominant currency has been essential to American power. If the dollar ceases to be the preeminent reserve currency, the United States will lose its ability to fund its trade deficit without higher interest rates." This is huge. This is massive because it tells us that they must continue this policy. They must have the dominance, or you're going to have higher interest rates. So what's it going to be? The role of reserve currencies in the global economy is essential to understand. We've got to keep paying attention to it. The US needs stability and security with their currency, and so do the people. So what can you do? Well, the number one thing is that you do not have all your eggs in one basket. And that means you got to geographically diversify. You got to earn money in different currencies. At the same time, you have to have assets that are spread out. You do not want all your assets, number one, in like the different asset classes. I talk about all the different asset classes in my first book, trying to highlight that people need to have diversification, but also geographical diversification as well, because the world's changing. It isn't what it once was. Okay, very important. Like I know people, now I'm a real estate investor and all the real estate they own is clustered in one area. I know what you're thinking. It's just not wise. It's just not wise. Sometimes we have to cede a bit of control and have, property management company taking care of that overseas with a small percentage, at least that small percentage, because if something happens where you are, you always have another place that you can go and call home, at least temporarily. If something happens at your doorstep, it could be a natural disaster, it could be a government problem, it could be any number of events. And suddenly you need to get out, and now you have a property, you have value that you really have right in your hands right now at this time. And so I just think without that, people are just making a big mistake. So those are just a couple points, a couple tips. I hope you appreciated this information. What do you think about it? Please let me know in the comments, and I'll see you next time. Take care.